Welcome back to Finance Watcher, your trusted source for crypto news, market analysis, and financial insights. Today, we're looking at a story that has XRP investors paying very close attention. A major surge in XRP trading activity has sparked speculation that institutional money may be quietly moving into the market. Some analysts believe this could be an early sign that financial institutions are taking XRP more seriously as a cross-border settlement asset. But is this really institutional adoption? Or is the market getting ahead of itself? Let's break down the facts and find out. It all started with an unusual spike in XRP trading activity. According to crypto commentator Cheeky Crypto, XRP recently recorded approximately $89 million in trading volume within a specific market environment. What caught the attention of many investors was that XRP appeared to outperform both Bitcoin and Ethereum in that particular trading setting. Much of this activity was reportedly concentrated in South Korea, one of the world's most influential crypto trading regions. Major exchanges, such as Bithumb, were highlighted as key locations where XRP demand appeared unusually strong. South Korea has historically played an important role in crypto markets. Large shifts in trading activity there often attract global attention because liquidity can move rapidly across major exchanges. This is why many analysts began asking an important question. Was this simply retail speculation? Or was something larger happening behind the scenes? Some market observers believe the concentration of volume may indicate participation from larger financial entities rather than ordinary retail traders. While there is no direct proof that banks were purchasing XRP, the scale of activity has certainly raised interest across the crypto community.
To understand why XRP continues attracting attention, it's important to understand how supporters view its role in the financial system. Unlike Bitcoin, which is often described as digital gold or a store of value, XRP was designed with payment efficiency in mind. The XRP ledger was built to support fast and low-cost transactions. Supporters argue that this makes XRP particularly useful for cross-border payments. Traditional international transfers often rely on correspondent banking networks. These systems can require multiple intermediaries, delayed settlements, and large amounts of capital locked inside pre-funded accounts. XRP supporters believe blockchain-based settlement networks could improve that process. One concept often discussed is on-demand liquidity. Under this model, XRP can act as a bridge asset between different currencies, reducing the need for financial institutions to maintain large reserves across multiple countries. This is one reason some analysts believe XRP could play a larger role in future payment infrastructure. However, it's important to remember that potential utility does not automatically guarantee adoption. Real-world implementation depends on regulation, infrastructure, and institutional confidence. The biggest claim surrounding this story is the idea that institutions may be testing or evaluating XRP-based systems. According to the commentary, billion-dollar financial organizations and enterprise software providers are increasingly focusing on blockchain functionality rather than speculation. In other words, the conversation may be shifting away from price and toward real-world efficiency. Some analysts argue that high-volume XRP activity could reflect growing interest in blockchain settlement technology. Others remain skeptical. Critics point out that trading volume alone cannot confirm institutional adoption. High activity can come from many sources, including traders, market makers, algorithmic systems, and speculative investors. This is why investors should be careful when interpreting volume data. Strong trading activity is interesting, but it does not automatically prove that banks are actively purchasing XRP for operational use. At the same time, it does highlight that XRP remains one of the most closely watched digital assets when discussions turn toward payment networks and financial infrastructure, and that keeps XRP firmly in the spotlight.
Looking ahead, the future of XRP may depend on several important factors. Regulatory clarity remains one of the biggest variables. Financial institutions typically require predictable legal frameworks before integrating new technologies into mission-critical systems. Competition is another factor. Central bank digital currencies, stablecoins, and alternative blockchain networks are all competing for a role in the future of global payments. Despite these challenges, XRP continues to attract attention because of its speed, settlement efficiency, and growing ecosystem. If institutional interest continues expanding, XRP could benefit from increased real-world usage. If adoption remains limited, the market may continue treating XRP primarily as a speculative asset. For now, the recent surge in trading activity provides an interesting signal, but not a final answer. Whether this is the beginning of a larger institutional trend or simply another chapter in crypto market speculation remains to be seen. If you enjoyed this analysis, subscribe to Finance Watcher for more XRP updates, crypto news, market insights, and financial analysis. Thanks for watching, and I'll see you in the next update.